European markets look quite strong and we could see fresh all-time highs for some of the major indices here. Hello traders, Fawad Razak here, market analyst with FOREX.com. Now this week we've seen continued upward pressure for European indices. This is owing in part to the collapse in oil prices as a result of the US-Iran deal that was announced at the weekend. And prior to that, last week we had expected this news to come out. So the rally really began at the end of last week and it has continued through much of this week. Now with oil prices collapsing, this has boosted expectations that the ECB will keep rates unchanged rather than hike rates. And the same could be said about the Bank of England. So let's get into it and look at a few European indices. Starting with the Euro Stoxx 50 index, you can see that it has staged a key breakout above this area of prior resistance, and it has held the resistance. Previously, the index was consolidating inside this continuation pattern, a flag-like pattern, if you like, before staging a breakout. And then prior to that, the index was making a series of higher highs and higher lows, holding for the most part above the 200-day moving average, the thick blue line here. The 21-day exponential moving average is the white line, and the fact that the index is holding above both of those moving averages, this is providing a clear indication that the trend is indeed strong and we could potentially see some further gains in the days and weeks ahead. So the key question now is, where do we go from here? Well, given the fact that the index is trading at all-time highs, we could use Fibonacci extensions as our guide, and the 127.2% extension of the most recent downswing comes in at 6,424. So that will be the next upside objective. Keep an eye on yesterday's high as well, and if we can now climb above that level and hold there, then that could be our first level of support moving forward. The key level now is this level that was taken out during the rally at the start of this week. For me though, the line in the sand is a little bit deeper around this zone where we have the 21-day exponential moving average converging with last Wednesday's high, which was engulfed by this big rally on Thursday of last week. The high of Wednesday's range, last Wednesday that is, comes in at 6,083. So for as long as that level holds, the path of least resistance will be to the upside. The Spanish IBEX index is powering ahead after breaking through this resistance level a few days ago, and it hasn't looked back since. Given the fact that this level was tested multiple times before the breakout, any pullback to this area could be defended in the future, and it marks the most important support zone to watch on the IBEX moving forward. The level I'm talking about comes in between 18,480 to around 18,570. In terms of resistance levels, well, there's not many resistance levels because we are trading at all-time highs. So we could plot our Fibonacci extension levels, and you can see we've just moved above the 127.2% extension. The next Fibonacci-based target, namely the 161.8%, comes in at around the 20,000 psychologically important level. That could be the next upside objective in the days and weeks ahead. But to get there, we will need to see continued favorable conditions in the equity markets. So far, that's proven to be the case, with oil prices falling back and rate hike expectations being pared back as well. Typically, the UK 100 is lagging European indices in that it hasn't created any all-time highs just yet, but the underlying trend is clearly bullish. The index is testing resistance around the trend line after forming key support around this area of 10,130, which was previously resistance. We've tested this level a couple of times and then the market bounced back. Now it is testing the resistance trend, and a clean break above that area could potentially pave the way for a run to the all-time high that was hit early this year at 10,938, with 11,000, the next psychologically important level, being the next upside objective should the bullish trend continue. It's also worth keeping an eye on the most recent high of 10,590 or thereabouts, as that marks the interim resistance. So a clean break above the trend line and this high is what I'm looking for before the index could potentially set its eyes on new all-time highs. But like many other global indices, the FTSE too remains strong, and the path of least resistance is to the upside until and unless the charts tell us otherwise. The German DAX index is looking quite strong, and I think a break to new all-time highs could be on the cards fairly quickly, because the index is now finding good support from weaker oil prices, and it is trying to establish a base around the 21-day exponential moving average, having reclaimed it and moved above the 200-day moving average after a brief breakdown. That false breakdown scenario caused the formation of the bullish engulfing candle we saw on the daily time frame, which was related to the news of the US-Iran deal last week. And since then, the market has remained on the front foot, and the lack of any bearish news since has kept the bears at bay, meaning that the path of least resistance for the DAX remains to the upside. The all-time high comes in at 25,512. That was hit back in January. Just below that, we have a couple of other highs to keep an eye on, including this area, which was resistance on a couple of occasions. Therefore, from here, it looks like a run to at least retest the zone looks quite likely, because of the fact that other European indices, or some of the other European indices, have already broken out, and given the fact that US markets remain at or near all-time highs. Expect the German DAX index to follow suit and break through this level in the coming days, possibly heading to 26,000, which is the next psychologically important level. Thanks for watching. Don't forget to like this video, and for more market updates, head over to the news and analysis section of our website at FOREX.com. I'll see you in the next update. Take care.